Join us right now to talk markets. Anastasia Amoroso, she is the chief investment strategist at iCapital. Good morning to you.
Good morning. Good morning.
Hopefully, you had an opportunity to see Paul Tudor Jones yesterday. He had a whole bunch of views about gold, Bitcoin, the NASDAQ. We're now, are we 13 days away from the election?
He said he'd never buy a bond
Less than 2 weeks.
for the rest of his life.
Right, he wouldn't buy a bond. Well, I don't know about that, but he wouldn't buy a bond for a long time. What would you do?
Well, probably wouldn't buy bonds going into the election. And, look, rates have reset higher for a variety of reasons. Some of it, I think, does have to do with pricing in the possibility of a red sweep and what that would mean for budget deficits. Some of it has to do with stronger growth expectations. And I think that's actually good news for the economy. That's good news for the equity markets. And some of it has to do with repricing the Fed expectations, which, frankly, I'm not completely on board with, because I do think that even a strong economy still justifies rate cuts as long as inflation is somewhere around 2.5%. So, I would be sticking with equity markets in this situation. We know that volatility tends to rise into the election. We know that it typically subsides thereafter. And, I do think that if you look at both candidates' proposals, there are measures there that will likely lift the budget deficit if they're allowed to pass, assuming you don't have a split Congress. So, having that as a backdrop, I think that's why you worry about the long end of the curve and you stick to the short end of the curve,
right.
You stick to equities, you stick to alternatives.
We were also talking, though, about folks like Dan Loeb, who've put out notes now to investors saying he's even repositioning his portfolio to some degree around the possibility of a Trump win. And I ask about that because I've now heard from a number of business leaders, CEOs and the like, and also investors who are starting to try to think through the math and permutations of what the tariffs ultimately would actually really mean. Are you putting that into your basket of things to think about?
Look, the market is starting to move on that. And speaking of baskets, if you look at the Goldman, for example, Republican policy basket versus the Democrat policy basket, that has outperformed. The Republican basket has outperformed by about 7 percentage points since early September. And the reason why is partially because you do have a higher probability of a red sweep and a Trump win. But I think the other reason why you have some degree of outperformance is because the basket has financials in it. It has industrials in it. So it has the cyclicals that are also at the same time benefiting from rate relief story that's filtering into the market. So I probably would not necessarily pre-position for any sort of election outcome at this point because, predicted odds is one thing, but if you look at the polling numbers and if you look at the counties, you know how close some of those things are. So I wouldn't pre-position, but I would think about what is the economy likely to look like post November 5th. And it's all about strong economy that is also going to be benefiting from rate relief story. So that's why I do like financials. I do like industrial.
So you think it's a win almost for the economy, no matter who wins or no?
For the economy, big picture, I don't think the economy gets swayed one way or another, regardless of who wins. And the reason I say that, because, one factor is the possibility of a split Congress, but the other factor is both candidates have pro-growth supporting policies and also some negatives. So if you take former President Trump, for example, yes, there's a negativity of tariffs, but at the same time, there's the positive prospect of corporate rate cuts.
Right. What are the pro-growth? What's the biggest pro-growth policy that we've seen in the Biden administration? I can't name one in the Biden administration.
Well,
and what is she proposing that's pro-growth?
Well, the pro-growth measure would be the child tax credits, which are estimated to add about $100 billion in consumption to the U.S. economy, and it's something
like Keynesian almost, but
it's something like 0.8% of potential additional GDP growth, but that, of course, could be offset by the tax increases that Vice President Harris would be proposing. But the point is that either side has stimulative policies. They have things that would pay for those policies that would be contractionary. But net, whether you look at one side or the other, the impact to GDP is actually negligible. So I think where the markets will become focused is what does this mean for sectors? What does this mean for baskets? What does this mean for factors? And so I do think that you can see a lot more dispersion within equities, depending on who wins.
I think we learn. Don't you think we learn more and more that we have a great economy that almost operates in spite of Washington? It's like if gridlock is really what we want, it's like we can count on the U.S. economy to keep chugging along and probably outperforming the world, as long as we don't screw it up.
As long as we don't screw it up. And, you know, if you look at profitability of companies, if you look at margins, if you look at the innovation that's happening.
Look at the innovation, too, the envy of the world.
That is a big deal.
Yeah, the envy of, and they're 25 years old, these people.